A lot of product managers think it's their job to generate all the ideas, but it's not. The job of a product manager is to collect the ideas and curate them based on the best idea. The guidance I would give people is it's okay to change your mind. You can't change your mind on everything all the time or your team will spin. But there are decisions where you will be like, I'm making the best decision in this minute, given the information I have, because it's better to move forward than sit here in a job where I see and I see myself being growing, being utilized completely. There are three things. One is I can see and feel my impact. The second thing that is critical to me is personal growth. And then I think the people you work with.
Hello, everyone, and welcome to Fintech Leaders, coming to you from New York City. I'm your host, Miguel Armaza. I'm a co-founder of Gilgamesh Ventures, a venture capital fund that backs early-stage fintech entrepreneurs. If you enjoyed this conversation, I invite you to leave a review on Apple Podcasts or Spotify so more people can learn about fintech leaders. In this episode, I sit down with the extraordinary Diya Jolly, Chief Product and Technology Officer at Xero, a $22 billion tech giant that offers accounting and CFO management services for small businesses worldwide. Xero is one of the largest fintechs worldwide, and their latest total annual revenue was $1.6 billion, and they've doubled in size over the last 3 years. Prior to Xero, Diya was the Chief Product Officer at Okta, and before that, she held multiple leadership product roles at Google. She's extremely thoughtful, and this conversation was a delightful masterclass on building a tech and software business. We discussed the tensions of product managers and how to navigate them. Is cannibalizing your own product ever a good idea? How AI is revolutionizing accounting, frameworks to make good decisions with incomplete information, and a lot more. Diya, I thought we could get started talking about some of the rich experiences you've had, because you've had product leadership roles at Google, Okta, and Xero.
Yeah.
So maybe you can take us through the differences between product development at each one of the three based on your experience.
Absolutely. So I think before I go to the differences, there are two fundamental things about product management. One is deeply understanding your customer using whatever mechanisms you have available to you. And then the other is not having perfect information while making decisions, right? You have to make informations based on imperfect data. So those two remain same regardless of what company or what kind of customer segment you're serving. Now, if you look at Google, Google was more consumer focused, large company with lots of data. Okta was mid-size-ish when I joined, about 400 million in revenue, scaled pretty fast, but I ran the product organization, which meant it was not just developing products or building businesses. It was a lot of how do you build a product team? How do you build a product culture? All of that stuff. And then Xero is somewhere, I think Xero was about $1 billion-ish US dollars when I joined, a little bit less, 700 million, and is, I'd say, right in the middle of enterprise and B2B. Enterprise and B2C, or B2B and B2C. It's B2B software, but it's to small businesses which have some characteristics of B2B, but then have some characteristics of B2C. So it's been interesting. I think in Google, when you look at Google, you have a lot of talent available to try different things, and you have a lot of data. So even if you cannot get a good gut sense for something, you can iterate very rapidly, experiment, and very quickly if your idea is any good or not. You also get to learn from a bunch of people as you grow, because I grew at Google, right? My career, I was a PM before that, but the heart of my career was at Google. I joined as a senior product manager and then ended up running YouTube monetization. And you have a lot of people to learn from and a lot of products to look across and learn from. So somebody somewhere has faced a similar situation. And so you're able to also generate, you're not the only one generating ideas, you're able to generate ideas in whole, which is the holy grail of product. A lot of product managers think it's their job to generate all the ideas, but it's not. The job of a product manager is to collect the ideas and curate them based on the best idea. Of course, generate your own as well, but impartially curate the best ideas. At Okta, it was very different. It was B2B, it was enterprise, it was a smaller company. So instead of data, because B2B, you don't get a lot of data, you don't have as many customers, especially in a mid-sized company, you have to actually interact with dealing directly with the customers a tremendous amount, right? You actually I spent 30-40% of my time actually talking to customers, understanding their pain points, helping them use our software, etc. And that gives you the understanding of what the customers need. I think the other thing there is you're building the team, you're building from the ground up. Usually in a company you're bought, rarely if somebody has decided to go off and do something else, but more often than not, if there's a big change the company wants to make in a different direction and the incumbent thinks there's a need for someone else, right? And so with Okta, there was a need to go from being a very CEO-led product company to the company at 400 million was too big for any one person. So how do you go multi-product? How do you get a product team that can scale to being able to build products, etc.? And now you have to go build a team from scratch. You also are more limited outside Google in resources. Nobody realizes how tight it gets outside of Google, but you are limited in resources. So you could have all the data in the world, but you're still going to have to rely on your gut because you just can't get everything done. And then at Xero, I think it's been a very interesting balance of, we have a pretty big customer base. We have millions of small businesses and they use us very frequently. We have tons of accountants and bookkeepers. So it's both data as well as intuition. There isn't enough data like a consumer company like Google that's at scale, but it's not an enterprise business. So how do you combine both qualitative understanding of the customer with quantitative understanding? At the same time, how do you do this globally? Both Google and Okta were very US focused. Google wasn't, I mean, yes, Google is international focused, but the majority of the revenue was here. And at Xero, we're very geographically dispersed across multiple different continents, 3 different continents, with very different customer needs. So how do you build for that has been something that has been interesting. And at Xero, the other interesting thing has been having both sides of the lever, because I run both tech and product, or engineering and product. So how do you balance all sides of the lever? Stability, making sure you have good tech, making sure you're innovating for customers, etc., has all been very interesting.
On that front, what are the biggest tensions that you have to navigate? And you or any other product manager or even CTO, because you have different interests within the organization, trying to pull in perhaps different interests, but you're kind of in the middle. What are some of those tensions?
I mean, there are lots of tensions, right? There is features that get you quick wins versus features that differentiate, like copy features versus features that differentiate. There are features for current customers versus features that will get you new revenue. There is how much should you launch versus how much should you spend on making sure your platform is stable. There's how much should you spend on making sure your platform is stable versus how much should you spend on making sure your platform has the latest tech, because while you may not see the benefits today, there'll be benefits tomorrow. There is, should you build to close that next deal, but it's only for this one customer, versus should you build for the masses? When have you done enough? When do you switch? How do you when is you start with an MVP, you develop it, but when do you go, okay, I'm now going to thin out this team and move people over to this other team because this product is reaching more maturity, whether it's from any of the angles I mentioned, whether it's infra, whether it's newness of tech, whether it's customer facing features, right? So I think those are the big tensions. And then I think, how do you listen to all the different cohorts? To your point, marketing wants something different, sales wants something different. Engineering, I think most good, because if you're a PM, you really, and this is my belief, right? You and your CTO should be able to step into each other's shoes. And that's what makes the best partnerships. And really, you can't say a CPO is not responsible for stability or the newness of the tech, because they won't, eventually in a year, they won't get what they need, right? Like you're not building for customers where things go down all the time. So I think that's less of an issue. And then I think there are a number of different tensions you have to balance in a number of constituents.
And kind of staying on this topic, I think is interesting because oftentimes you have to make decisions with incomplete information.
Yeah.
Right? How do you know how much is enough versus trying to pursue, I don't know, 90%, 95, 99, but more often than not, you don't have full, complete information. How do you think about this specifically?
Yeah. So I think you have to have some level of information. I don't believe you ever need to have 100% information, because I think that the returns of that information is I just don't think, I think the ROI of that information starts going down, the marginal returns. I strive for, it's hard to put a percentage, but I strive for like somewhere around 70 is what I'd say, percent information. What I mean by that, how do I know it's 70%? If I can understand the problem and the different levers of the problem, right? And I can say, I can draw a tree that goes, if I had all of this information, here is what my decision tree would be, right? If I can get to that stage, I don't need the data on the trees. It's great to have the data on the trees, but then you can start boiling down. Then you can start going, okay, what's the probability that this tree, like that this situation is the right answer based on what I know? What's the probability here? And then you come up with the probabilities and the estimates of the impact based on your experience, your team's experience, trends for other data, etc. Right? And that's how you make decisions. So I'll give you a live example because this is very abstract. One of the decisions we were making this morning, is my team and I are like, well, should we build this new product? Does it make sense for us? And we went, okay, so what do we know about this market? We know it's very closely tied to bookkeeping. Okay, that's a check. What do we have to, who are the current players in the market? It's player A, B, C, and D. How much share do they have? How long does it take to switch this software in the market? And then once you start going that, you can start, okay, if it takes long to switch the software and we have low ability to build something that is differentiated, then maybe the answer is no. So you start from that perspective. So that's one. The second thing is, I'm a big fan of, having been through Google, having learned the Google way of experimentation. I'm going to go back to something that Bezos said. One-door decisions are very different than two-door decisions. And if you can move in a two-door decision, you will actually get more information. Even in a one-door decision, you may feel like it's a one-door decision, but the chances are you can move forward without it being a one-door decision, get more information, and then you can change your mind. The trick is, I think the people that, the guidance I would give people is, it's okay to change your mind. You can't change your mind on everything all the time, or your team will spin. But there are decisions where you will be like, I'm making the best decision in this minute, given the information I have, because it's better to move forward than sit here. And if my hypothesis on these few things does not turn out to be correct, then I will go change this decision. But I know if it's a two-door decision, I can change it whenever. If it's a one-door decision, I know I have till this milestone, and then I'm kind of stuck.
That reminds me a lot of one of my favorite podcasts I've recorded with Martin Escobari, who's the number 2 at General Atlantic. And he was an entrepreneur, now he's an investor. And he always talks about, as an investor, you make 10, 20, 30 decisions a year. But as an entrepreneur, you make that in a single day or a week. Yeah. But the difference is you can course correct very often.
Yeah.
Right. Exactly. That makes a lot of sense. I'm just thinking about the kind of talent that you have under your organizations. I think this is super relevant for you because you are now in charge of product and technology. And I want to give you kind of some background. We, at Gilgamesh Ventures, we recently conducted a study along with the Wharton School where we analyzed the top 15 companies in fintech producing founders. 50% of the people that left these companies to build a new fintech company, they came from your organizations, from product and technology.
Yeah.
Sounds like this makes a lot of sense to you. Yeah. Why do you think that is?
Well, I think a startup means you are being able to understand a need a customer has, and you have a unique way of fulfilling it that somebody is either not fulfilling, but more likely fulfilling in a way that's suboptimal to what you're thinking, right? If you think about the people that do this as a daily job and who are best, like who've done it their entire lives, it's either a product person identifying the needs. And again, I think the boundary in a very good product and technology organization, you should not be like the boundary crosses, right? Or it is a technologist going, hey, or it's an engineer going, hey, there's this technology. I think I can do this cool thing, and then going and getting more information, which is why I think you end up having more, in general, you end up having a larger percent of founders be product and engineering people. And they are also used more to, I think, pivot, experiment and pivot, and that does not daunt them as much. So if one idea didn't work, they'll pivot to another idea. And I think that's why you see it. I think other domains like sales, etc., may understand a customer need, but I think because they spend a lot of time with customers, but I think turning that, they haven't practiced turning that into a product. And I'll be honest, I think for them, the barrier of like, how the hell will I build this is a bit too far generally. Having said that, there are very successful salespeople that have started companies.
It's hard to have absolutes, but there are clearly some trends.
Yeah, exactly.
Yeah. And you talk about kind of the decision that you often have to make about whether to launch a new product or a feature or something along those lines. When it comes to cannibalizing your existing products, there's this school of thought that says it's always a good idea to cannibalize because otherwise someone else will do it. But not everyone thinks that way. What are your thoughts on this topic?
Yeah. So in absence of any other constraint, making your product better is always a good thing, right? Having the best product out there is always a good thing because somebody else will develop it. And so yes, in the absence of any other constraint, cannibalizing your product is the right thing to do. On the other hand, you have some real live world constraints, which is there is a certain part of your product that is already being cannibalized or is not selling as well. Where are you going to put your limited resources? There is another part of your product. There is a part of your product that is you just launched it. It's fantastic, but it needs to mature and get to V2. Where are you going to put your resources? You forget the resource constraint. Your P&L might require you to cannibalize at a slower rate if you're a public company, because public companies do have a responsibility to shareholders. Then you might want to cannibalize that. In general, though, I think any of these hold for a short period of time. If you truly sit on your product and go, I am not going to move it to the next level, and that's not going to be the best product. I think in tech, in 2 years, you're going to have a problem on your hands. So I'm very much in the, you have to make sure, if you have to cannibalize, you have to make sure it's the best product, but you have to do it in a responsible way because it's not the only decision you face.
Interesting. And so maybe tell us a bit more about Xero, right? A lot of people probably know the basics. I mean, it's not a small company. I think as of the time of this recording, I checked, market cap is about 22 billion. So
Yep.
Definitely not a small company, growing, but give us kind of an inside look. It's very global and it has more than just one product.
Really an accounting software company. It started in New Zealand. The original founder was in New Zealand, was a founder of another company. And he basically was using desktop software to do accounting for his company. And he got super frustrated and was like, why do I have to use desktop in this cloud era? And so he built the first cloud accounting company. So at that point, if you think about when I say accounting, it's QuickBooks, it's Sage, right? That's who are other players in this market. And he built the first cloud accounting platform. It grew in New Zealand and Australia. He also started in the UK, grew a lot in the UK. US, the accounting world divides into really at least two types of accounting. There's GAAP accounting, which is US, and then there's Commonwealth accounting. And then there are others which are not as big. But most companies build for one or the other. Like Intuit's built for GAAP accounting, and these guys built for Commonwealth first. So when you look at Xero, it does extremely well we're number one in AU, in Australia, New Zealand, and UK. We're very prominent in a lot of other English-speaking Commonwealth countries like Singapore, South Africa, Malaysia, like a lot of these countries. And in terms, and then now, as you well know, we've been in the US, but we've been growing in a bunch of these other countries. Now we've said one of our focus areas is the US going forward. In terms of products, it has accounting, it does core accounting. So it has a ledger and a bookkeeping product, which is its core. That is how it grew up. It has a payroll product in Australia, New Zealand, and the UK. It has we do payments. So if somebody, because our customers actually send invoices out from their ledger product most of the times, because it's easy because it books it into the ledger and all their bills get entered. How do you get paid from your customers, and how do you pay out your vendors? It's got payments. We also have we have small businesses as our customers, but our closest partners / customers are accountants and bookkeepers as well, because we have to make them successful in what they need to help the small businesses. And so for them, we have solutions like tax. Business tax is really done by small businesses themselves. They all funnel their way through accountants. So if you make the linkage between tax and bookkeeping tight, it removes a lot of hassles for the accountants and bookkeepers, and especially for the small businesses. And then we have accounting software that makes it easy for them, or accounting practice software that makes it easy for them to work with their customers. And then we have advanced analytics. So a bunch of different products. If you think about Xero, our vision really is to build the most powerful small business accounting platform for small businesses around the world, so that they can focus on what matters to them, which is growing a business.
Absolutely. Now, I don't mean to ask you just a stereotypical AI question, but I kind of spent a lot of my days looking at early stage companies.
Yep.
And there's definitely been a strong wave of companies trying to launch the next accounting automation software using Gen AI, using LLMs, right?
Yeah.
I'm sure you spent time thinking about this, right?
Well,
what are your thoughts? Yeah. What are maybe tell us a bit about what you're doing.
Yeah. So the funny story is, I wanted to do that right after Okta. I spent 3 months trying to figure that out. And then I ran into our CEO, Sukhinder Singh Cassidy, and I'm like, oh. And I sort of also realized, you know what? To do AI, you need data. I don't have customer data if I start from scratch. So my models are only as good. Having done AI at Google, like I was right in the middle of that. I was like, you need customers. If I want to really build small business software that helps them free up their times, I need a platform that has customers, because I need the data to build stuff. So I think, and it turned out to be true. So we're doing a lot of different things there. If you look at AI, and you can actually see, I got excited. This is an area that really excites me. So at a broader level, I'll give you 2 frameworks to think of. One, or your listeners 2 frameworks to think of. One is, if you think about AI, if you think about accounting, there is a lot of manual tasks that range from data entry to repetitive tasks, like making sure your transactions match to your bank. Manual data entry is, I'm entering my bills, I'm entering my W-9 form. Like, there's so many things you do. And then repetitive tasks are, I'm balancing my books against my bank account. I am making sure that my bills are paid, even though I have to click a button just to pay them, right? So there are a ton of manual and time-consuming tasks that AI can definitely automate away, and we're working on that. Like, we have this thing called, we have HubDoc, which basically any paper you get, you can scan through, and it enters the information into the right place in your ledger, give or take. It starts with bills. We've expanded it to bank statements. If you want your bank statement inside Xero, we're looking at a bunch of other things. So just even before you start getting to Gen AI and LLM models, like even just next gen OCR that leverages some of these models, because not only do you have to extract, you also have to fill, is very cool. You can do things like, let's say somebody sends you a new bill, you don't even have to now enter this information of the vendor. Like, you can automatically get the address book updated. Same thing with an invoice, etc. The other thing is, you can actually give insights. So benchmarking and telling a small business owner, here is where you could reduce costs, or here is where you should pay off our employee if you have shift employees, or even going, hey, we predict that your invoices come late. So if you pay this bill now, your invoices get paid late. If you pay this bill now, like, you have invoices from these people, 20% of them pay late. If you pay all your bills now, you're going to be in a cash flow deficit. Please, these are the bills you should pay later, because you don't have to pay them now, right? These simple things that provide you insights to be able to run your business. Here's how much working capital you should always try to keep. Here are the places you can getting them loans. Here are the places that would, or even if they want connecting, like giving their information to a bank saying, here's the risk profile. So there's so much you can do in AI. And then the third bucket, is really what I call reimagining accounting. So if you think about accounting, all of this is you're assuming someone's still at a laptop, desktop going away. If you look at all other SaaS applications, they have moved to mobile. And they've untethered you, and you're free and you can get your work done. Any real big thing you have to do, you're still sitting on your laptop and desktop in accounting. But when you think of Gen AI and you think how it can make 1 and 2 happen, but then how you can add language, make it conversational on top, you suddenly untethered you don't have to read lots of data to get insights anymore. You don't have to manually input in a bunch of stuff to get going anymore. So you can do things like, for example, hey, I am actually matching your what's called bank reconciliation. I'm matching your sales and expenses to your bank account to make sure that all the money matches. I'm going to do it for you automatically. But if I have a problem, I'm just going to ask you a question on a notification on the phone and go, what was this expense for? Right. So we've actually just launched Xero, which is our Xero Jax, which is our Gen AI companion. And the thing we've done is we've not just launched it on desktop. You can use your text or your mobile or any other, if you're in Teams or anything, we're building the second piece of it. You can basically go, hey, what's like, if you're trying to say, if you're somewhere doing a job, you can say, how much does this customer have outstanding? And you can just tell them, I want to be paid now, I can be paid later, right? You can say, hey, please raise a quote for or invoice for this customer. I've just finished my job from your phone right there. You don't even have to go into a Xero app. So I think that's how, when you start rethinking about accounting, you want accounting to be instead of it being a compliance thing you want to do, you want the compliance piece to become as easy as possible, and you want it to become more about helping you drive your business forward. And that's where I think Gen AI can do a lot of that.
So a lot of what you've been describing, and clearly I love that you're passionate about this topic, it's the result that your customers are going to see, right? And it's a more simplified world for them, of course. Now, for you in the background, I've been talking to a lot of company leaders in different verticals, and they talk about these amazing solutions, but everyone makes it clear that to deliver this, you have to be extremely intentional, right? So at Xero, to get this delivered, you have to have dedicated teams and be very intentional, because nothing is going to be off the shelf in the market. Can you talk a bit about that, like implementing this internally?
Yeah, absolutely. So accounting also has the additional complication of, or fintech in general has the additional complication of, you not be accurate. It's not okay to go, the models are hallucinating, right? So that is the additional complication of which you will see most fintech players are playing around with AI, but a lot of other companies have taken Gen AI out of beta and put it in GA. And if you look at almost every fintech player, I did an analysis, I don't think anyone has, right? Because everyone's testing with their different methodologies. So we actually did get a separate effort going. We have a separate team. The team, we hired someone from Amazon that actually was running their Gen AI efforts on the technical side. And then I have an AI background because I worked in the YouTube auction and YouTube, etc. So like I have a pretty strong AI background from a product perspective. And then he hired a bunch of people. We also have a resident AI scientist who leads a large part of the team in Australia, who's really good. But we hired a bunch of people. We hired the scientist here, and then we hired the person that ran Uber's AI efforts as well on the product side. And then we put our lead engineer, one of our engineer stars, against it and said, hey, no holds barred. What do you need to do? And this team basically reports up to me every week or 2 weeks, depending on what's going on. We clear any backlogs. Like, you have to intentionally, I think your point is correct. You have to get senior enough people. It's a team on a mission. That is their goal. And then not only that, you have to be involved enough that you can make the calls to clear trade-offs. Like, there are hundreds of times where like these guys have had to go and tell someone else to deprioritize something on their roadmap that I asked them for. The only person that can give them permission to be like, okay, the other team is, yes, this is more important than that.
Yeah, fascinating stuff. And I'm excited because I'm seeing those efficiencies pop up everywhere. I mean, I talk about this often, but recently one of my guests was the CEO of Kaspi out of Kazakhstan, and they haven't grown their headcount, at least for many areas, customer facing areas, in like 3 years or 4 years, but they've become far more efficient. They've grown 4x in almost every other metric. So
And that you will be able to help accountants do that on their tax side, right? Like everything I talked about was from a small business side or much more from a small business side. For the accountant, as they are doing tax, you can provide them with a significant amount of efficiencies by saying, hey, there's this new tax law. We just read the tax law that applies to your client. Would you like to try it? Or do you like, are you sure you want to like apply for this reduction or whatever it is?
Dia, let's talk before we run out of time. Let's talk a little bit about kind of your career and maybe the biggest challenges that you've had along your career. Because to me, it's interesting that you've gone from ad tech to consumer security, fintech, right? So, I mean, technology is behind everything, but I imagine it's not easy moving from industry to industry.
I don't find it hard. I like it. I look at to learn a new domain because after having done 20 years of product, it can get a bit rote, but I don't ever choose my jobs based on domain because I have always been a super quick learner and I can dive pretty deep very quickly. I think for me, the reasons that led me to these three jobs in hindsight, every time I have been happy in a job where I see like and I see myself being growing, being utilized completely, there are three things. One is I can see and feel my impact, right? Like my as in like I wake up wanting to make a difference to the customers. I can actually move. I'm not stuck in mud. I have the support to make change, or I'm in a system that is making change when I was more junior, right? So I could be more effective. The second has been so if there's no impact, we all work a lot. You wake up in the morning and go, "What the hell am I doing? I have so many better things to do with my life." So that is critical to me. The second thing that is critical to me is personal growth. And earlier in my career, I would chase this aggressively, which is why you see me going across different domains, etc. Which is I'm like, look, I wherever I would get growth, it would be less even about like a position or whatever, but it would be like what am I going to learn in it? And I don't mean domain, I mean skill sets like doing product better, being able to go deep in engineering, being able to work with a salesperson to understand how sales happens, etc. So I would chase those. And then I think the people you work with. You often, the first two is very easy to remember every time you look at a company. The second, because you have no way to gauge, because there's no factual way to gauge, you often end up discounting. The times I made my best career calls are when I've listened to my intuition on the third. And again, but made sure that the first two are there. Whenever I ignore the third, it ends up not being a lot of fun. And again, I'm not saying some people are good to work with, some are bad too. Different people work well in different situations and with different types of people. You got to find your own kind of people that you will thrive with, and that I think is key because it's not the same. My husband actually is the chief product officer of Automation Anywhere, and the kind of people he works well with is very different than the kind of people I work well with. So it's like very transparent, like it's very apparent.
You mentioned being a quick learner, that you love to dive in very quickly. Any techniques that you found that work for you?
Three techniques. One is before you start, before you have any preconceived notions and get overwhelmed, write down what you want to know. So every time I go, I have a list that is called a getting started guide that covers here's what I want to learn about the product. Here's what I want to learn about sales. Here's what I want to learn about the tech stack. Here's what I want to learn about the people. Like it's literally a pretty rigorous getting started guide. And I go, and so I know before going in, so I don't get pulled in any one direction by the force of the organization and forget. Then obviously learning is not linear. So you break the learning up into chunks in your mind. But the more important, and the all, because you can't do it all together. You can say week 1 or 2 is product, week 3 is industry, whatever you want to do for the first like 6-7 months. And then you go and then you actually write. And then this is an important trick somebody told me. It's a combination of at the end of every week, if you're supposed to check off a certain set of learnings, read it and have you like read what you've learned, collect a lot of reading, read it, and then have you truly learned it? And if there are open questions, write it down and make sure to follow up. And then the other tip a person gave me was in your first 6 months, every time you hear a word you don't understand, write it down and go follow up and ask the person, right? It's a concept, a word, don't let it go. It's equally important to everything else you're doing, but do it and follow up because you're going to need to learn. And every time, because the longer the longer you've been in a role, the harder it is to ask the basic questions. And so I think it's that. And then on an ongoing basis, it is just setting up enough reading time.
Speaking of reading, any favorite books or books that you find yourself recommending often, one or two?
There is. Hold on. I never remember names. Oh, The Accidental Superpower by Peter Zihan. The Accidental Superpower by Peter Zihan is one that's really interesting. How Not to Be Wrong, The Power of Mathematical Thinking is extremely interesting. Those are the two that I've read recently that I think pretty highly of. I may not agree with everything they say, but they're definitely thought-provoking.
Excellent.
Yes.
Well, this is super interesting. I can feel your passion about what you do. Must be fun to work with you. But I'm certainly grateful for you stopping by, and I think the audience is really going to enjoy this episode. And I don't mean that lightly.
Thank you. I appreciate that. I really appreciate that. And I appreciate you having me over.
Of course. Yeah, it was about time.
Awesome. Let me know if I can ever help you out in any way.
Thanks for tuning in. I hope you enjoyed this great episode with Diya Jolly from Xero. If you want more interviews, make sure to subscribe, follow, and leave a review on Apple Podcasts, Spotify, or whatever you get your shows. It helps and means a lot. And if you have any suggestions or thoughts about the show, just drop me a line on Twitter or LinkedIn. Signing off till next week, I'm your host, Miguel Armaza. The Fintech Leaders podcast is for informational purposes only and should not be considered financial or investment advice.